Hey folks, Andrew Packer here, and welcome to Trading Tips. Now, there's been a lot of developments in 2019 in corporate America. A lot of these have been positive developments, and only a handful of them have really been negative developments. That's been good for the stock market. But if you don't want to chase stocks higher, well, sometimes I think it can pay to look at the companies that are suffering right now, that do have this bad news out there that's keeping their share prices from going higher or even sending it lower. By looking at the companies that aren't doing well and figuring out whether the issue is temporary or maybe a more permanent or dangerous problem that could lead to bankruptcy, this is where we find market-beating opportunities. So today, let's look at one of these companies that's essentially fallen from grace in recent weeks. It's the company Boeing, ticker BA. They're a manufacturer of commercial aircraft. They also do a lot of aerospace contracts for the government. In short, this is a company that does a lot of important things and keeps people in the air. But recently, their 737 MAX has had some problems. Apparently, some of the software on board has been conflicting with other software, and it's been making the planes have some challenging flights, and a couple of planes have even crashed as a result. And that's an unfortunate thing, but around the world, the 737 MAX has been shut down. The company is working on rolling out software updates to make sure that these issues will not develop again, and it seems as though this is a temporary crisis. But weeks after this started happening for the first time, and weeks after the FAA and other aviation agencies around the world just shut down all 737 MAX flights, well, it seems like the company has been having a little bit of a problem with their PR about it. They've been having a little problem just coming out and saying explicitly what the problem is to begin with. They were initially blaming the pilots at first, not the software, until this information came out. It's been, well, just a bit of a mess for the company. And in a way, it reminds me of the BP oil spill in 2010. As you'll recall, there was the Deepwater Horizon explosion that caused a massive amount of oil flooding into the Gulf of Mexico, and that was a huge PR disaster for the company. But in time, even though shares dropped initially as a result of it, and even though they certainly weren't making any new fans, and they were certainly justifying environmentalists' fears about drilling for oil in the Gulf, eventually share prices recovered, the Gulf cleanup work started. Some say it's still not done, they're still working on it, and the company's had to apologize in a myriad of ways. Well, Boeing really hasn't had that apology moment yet, but they are working to resolve the problem. And given the size of the 737 MAX fleet relative to all the other airline types that Boeing makes, it seems as though this is not going to be a problem that's going to lead to bankruptcy or otherwise the company being shut down or a permanent loss for shareholders. It looks a lot like this BP situation back in 2010 where there was that eventual recovery. And the other advantage that Boeing has here is the fact that when you think of companies that actually do manufacture airplanes, well, there's Boeing, and if you're familiar with some European companies, you might be familiar with Airbus. They're the other big player in what's essentially a duopoly in the market. There are a couple of companies in developing countries like China that are working on developing commercial aircraft, but they're still doing that internally. It's not the global competition that Boeing and Airbus are going after. Now, as an investor, investing in a market where there's really only two big players means that both of them are probably in a position where they're not necessarily going to compete particularly hard against the other because the amount of market share they can steal from each other tends to be limited. You can think in terms of Coke and Pepsi as an example for that. So as an investor, an oligopoly is as close to a monopoly as we want to get for regulatory purposes, just because of the amount of problems involved with that and the government potentially shutting that down. An oligopoly is the perfect place to be in as an investor, and Boeing really hits a lot of the check marks there. There are a lot of smaller manufacturers of aircraft in the US, from Gulfstreams and Cessnas, but they're really not competing with that commercial side the way Boeing is. Boeing has it locked down. They have a lot of political clout to do their work internationally and try to get more planes sold because it's good for American jobs, and that's the kind of thing that the entire delegation of the state of Washington tends to be behind, and even job-focused individuals in Washington like President Trump, very supportive of these measures that ensure that the company can continue in operation, continue having the jobs, and continue making a profit for shareholders along the way. So when we look at what's going on with Boeing shares, well, they actually had a pretty good start to the year, along with the rest of the market. And this recent scandal, which will pass in time, has taken some of the edge off of shares. Looking at a valuation basis, Boeing trades at about 16 times forward earnings. The overall market is still trading a little north of 20 and is considered to be a bit pricey by some, especially myself. So the chance to buy an oligopoly company with less competition than others at a discount to the overall market actually makes this look like an interesting buy right now. So looking at the share price, which is admittedly pretty high, buying at or under $400 per share seems like a pretty good buy-in right now. Now, I don't expect this to be a double or triple anytime soon, but over time, Boeing has outperformed the market because of its oligopoly status. And the fact that we can buy it now at a slight discount to the market thanks to its recent scandal, probably about 10% off the top of where it was recently trading, means there's a little bit of a built-in advantage here, especially compared to where the rest of the market is already at. Imagine this, the next market sell-off is going on, but Boeing comes out, they've resolved their problems, and shares get a boost. That's exactly the kind of company you want to be targeting right now. With so much good news out there, focusing on companies that have bad news can give you that little market-beating edge for the next time things turn south. So consider Boeing at or under $400 a share and look for the resolution of this issue. So until next time, that'll wrap things up for this edition of Trading Tips. I'm Andrew Packer, wishing you good trading and good financial health.